And we're back. This is part 4 of the talk on itemized deductions from chapter 6. So we just left off with our casualty losses, and now I'm going to move on to miscellaneous 2% deductions. So we call them miscellaneous 2% simply because the limitation that we're going to get to that's based on AGI, it is 2%, but more on that in a minute. First, in general, this category of this miscellaneous stuff that's subject to a 2% floor from AGI, there's going to be a whole lot of different stuff that falls in this category. A lot of it's going to be related to work. There are some other things related to investments that we'll get into, but essentially, this is just a big hodgepodge of just other stuff that the government has decided to provide some sort of tax subsidy for. So the first kind of major category that falls into this miscellaneous itemized section is what we call employee business expenses. First thing to point out is that these are unreimbursed expenses. So you paid for something in order to do your job, and your employer didn't pay you back for it. So examples that fall under this category and that are potentially deductible are professional dues. So say like for CPAs, it's generally expected that you're going to belong to the AICPA once you get licensed, or possibly your state CPA board. If for some reason your employer wants you to be a part of those organizations but doesn't pay for you to be a part of those organizations, then that amount that you're out of pocket that is kind of required for you to go to work is potentially tax deductible. So professional dues, that's where that would fall. Subscriptions to professional journals, it's the same thing. Your work wants you to have these things, like it's necessary for you to do your job, but they just don't reimburse you for it. Uniforms also count. Also, continuing education. We should say that that's to maintain or improve current job skills. What this means is that it's like for CPAs, continuing education is a really big annual requirement. You're expected every few years to have met some big number of hours that you've been in the classroom just trying to stay fresh on what it means to be a CPA. That sort of continuing education falls under this miscellaneous 2%. If you're just taking extra classes at like night school or something like that, trying to get some other job or just to get a degree that isn't actually necessary for the job you already have, that's going to be different. That's going to fall under those other kind of higher level education areas that we've already talked about. Some of it might be tuition and fees that qualifies as an above the line deduction. And some of it just might fall elsewhere, your student loan interest, things like that. When we talk about continuing education in this 2% miscellaneous section, we're usually not talking about going to college. It's usually you're just going in on a seminar. It's some kind of professional, like a conference sort of deal, most of the time. Aside from this stuff, other employee business expenses, there is an allowance for meals. So this is a little different, like when we said if you move for work, those meals that you have while you're moving, the government just says you're going to have them regardless. There's no deduction. Here, if you're at work and maybe you're traveling for work, for instance, and your employer basically requires you to be somewhere where you can't bring a lunch, you're not close to home, you have to eat because you're out and too far away from where you live. They'll give you a little bit of a break on that. It's just that you only get to deduct half the meal instead of the whole thing. Just kind of an arbitrary rule that the IRS developed a really long time ago. And it is very similar to your general business meals where if you actually own a business. So there'll be more on that in later chapters. The other part of it is this travel and transportation. So your job requires you to drive all around the country. Your employer, for whatever reason, doesn't give you an allowance for that. They don't pay for your gas or anything like that. So to the extent that you're driving your own vehicle and it's beyond your just normal commute, so it's not the miles that you spend just going from home to your office, but it's extra miles that you're going out to visit a client or Maybe you're going to pick up some supplies for work or something like that. Those extra miles that are purely business and not your regular commute, they're deductible. You can either take your actual costs of gas, like adding up all those receipts that you keep and things like that, or you can just take the standard mileage rate. And what's important here is that for 2012, that rate's 55 and a half cents. It's way bigger. It's actually pretty much double or more than all the other mileage rates we've talked about. So in terms of driving your own car, you're probably going to take that standard mileage rate most often when you're talking about business travel. Um, that 55 and a half cent number, it does come through. It is pretty big compared to, I think we were at 23 cents for moving and only 14 for charity. So beyond the kind of business, the employment miscellaneous expenses that fall in this 2% category, there's also stuff related to investments. So what's important first is to note that this investment stuff, this is not investment interest. We already took care of that by doing that whole other separate itemized deduction where we said we were limited to the amount of net investment income. It's all those other investment expenses that we took off in that limitation to figure out what net investment income was. A lot of that stuff is what's then going to fall into this 2% category here. So what we're talking about of these 2% deductions, this is stuff that's more general, maybe not so specifically related to one investment. It's stuff where maybe you just have to pay some advisor to help you out with your portfolio during the year. Or like it says here in the slides, you're buying a safe deposit box. Or maybe you're just subscribing to journals that help you kind of keep in touch with the market and sort of figure out what it is you want to invest in. So this stuff is usually kind of broad in nature. It can be specific, but what's really important to note is that it is not the interest that you pay on a loan to go out and buy investments. That interest piece, we already talked about it. We just have to keep track of that separately. But everything else that we spend related to investments that we can't make a case to deduct it somewhere else in our return, like in the stuff that we discussed that's above the line, or anywhere else. Basically, everything that's left, we might be able to take it here in this 2% category. The next one that just falls here, it's the cost of having your taxes prepared. So what this means is if you go out and pay a CPA to do your taxes, whatever amount you pay them, you might be able to deduct it as this miscellaneous 2% category. It also includes, by this last point, with contesting tax liabilities. So if you're going to court, attorney fees, court costs, all that stuff that you pay when you're just kind of fighting against a bill you've been assessed by the IRS, you can potentially deduct it. It is going to be subject to this 2% floor. Basically what that means is that there's always going to be some amount left over that you're just left paying on your own. But part of it may wind up being deductible if it's a big enough number. Another thing that you can throw in here on tax prep fees is even if you do your taxes yourself, but you go out and buy software like TurboTax to do your taxes, that is potentially deductible here in this 2% category. All right, so the next and actually last of these sort of miscellaneous 2% category deductions are what we call hobby losses. So by hobby, we mean that you are, you've got some sort of activity, you like to do it, but you also make some money from it. So it's not like you're in it for a business. It's not your sole purpose in life or anything, but maybe you just like to do arts and crafts, and then every now and then you go to like a flea market or something like that and sell what you've made. It's not a big money activity, and it's not your job. It's just something extra. What comes out of this is that all that revenue that you make from that, going all the way back to those early chapters we did when we talk about income from all sources derived, that revenue, even though it's from a hobby instead of your job, you're supposed to claim that. That's supposed to go in way up at the very beginning of your tax return. Where you get to offset some of that revenue is here in this hobby loss section that falls under this miscellaneous itemized deduction thing. So the expenses themselves, the IRS only allows you to deduct them to the extent that you have revenue from that hobby. So you can't take, I guess it's kind of a misnomer here when we call it hobby losses. You can't actually take a net loss on your tax return from a hobby, but you can deduct some of your expenses so that maybe by the time you get down to your taxable income calc, the revenue has been offset. But it's not actually a loss. The IRS doesn't really want to subsidize people with kind of bad hobbies or not fiscally sound hobbies, but they will give you a little bit of a break. So how do we report this on the 1040? The first part, the income, like I already said, it just goes in as gross income. It's going to be a separate line item. It's going to be other revenue. The expenses, we've actually got to wait and hope that we have enough to report on Schedule A in order to itemize. And then we'll put those expenses right in the hobby category, this miscellaneous section. But the amount that we put there is never going to be bigger than the amount of revenue that we had in the first place. That in itself is our limitation. So we've talked about a bunch of different miscellaneous 2% deductions. To figure out the total number that we actually get to deduct after we account for all these different activities, we just add them all together. So add all of the unreimbursed employee expenses, your investment expenses, your tax prep fees, your hobby losses, apply all of the rules to each of those things, separately like we discussed. But then whatever numbers you're left with, add them together. Take that big sum of miscellaneous deductions and subtract 2% of your AGI. If you've got anything left, that's your deduction. And that's what we have here in this Excel summary. So I do list down here the subpoints, all of the main miscellaneous deductions that we talked about. But literally just look at them individually, add them all together. So here's our lump sum, our initial miscellaneous deduction amount, and then subtract 2% of AGI. Anything that's left is our deduction. If this 2% of AGI number winds up being too big and we've got 0 or a negative number from doing this formula, our deduction goes away. We just don't deduct anything. We're left with 0.